President Trump just announced that tariffs on China might be coming down soon, and the stock market loved it. We saw the Dow Jones jump by more than 1,000 points on the news that there will be no trade war. But let me break down what's actually going on. That way you can be a smarter investor. Right now, the United States has a 145% tariff on Chinese goods. And in response, China has put a 125% tariff on United States goods. What does that mean? That if you're a company doing business in China, you are probably losing a lot of money. So companies like Apple, Walmart, and Tesla, who do a lot of business in China, have been bleeding because of these tariffs. So much so that there are many economists that are saying that these tariffs could put the United States economy into a recession. But this is where the White House says, have a little bit of patience. This temporary slowdown because of tariffs are better for the long term because it will allow the United States to renegotiate our trade deals with these countries to be more favorable for the United States. We just don't know when, and we don't know what it's going to look like. But for the first time, we might have a little bit of light at the end of the tunnel because President Trump has just said this about China specifically. Quote, 145%, the tariff is very high, and it won't be that high. It will come down substantially. It won't be zero. It used to be zero. But that's not all. Treasury Secretary Scott Bessent also had a meeting with JP Morgan Chase Bank where he supposedly said this, that talks between the United States and China would likely lead to a de-escalation. This is the hope that many investors have. The tariffs are going to be chilling out soon, and this will cause markets to rally. However, nothing has been finalized yet, which means you can still expect more volatility ahead. Now, we've been covering all of this in Market Briefs. Again, Market Briefs is my free financial newsletter where every day my team is working to break down what's happening in things like the economy, the stock market, the housing market, the crypto market, and the global economy into a fun, witty, and easy to read newsletter. We have hundreds of thousands of investors that are reading Market Briefs every morning. Plus, when you join Market Briefs, you'll also get our Investing Masterclass as a bonus for free just for joining Market Briefs. So if you want to get Market Briefs and our Investing Masterclass as a bonus, all you have to do is click the link down in the description below to join. Now, there's a few things that I want you to understand. We don't know exactly what's going to happen with tariffs yet. It's just rumor and hope and speculation, which is causing the stock market rally and upward and downward momentum that we've been seeing. The question that we don't know is what's going to happen with the economy in the meantime. We know that President Trump wants to see lower interest rates. If you've been watching what's happening in the financial news or reading Market Briefs, you know that President Trump has been bashing the Federal Reserve Bank for not cutting interest rates. Jerome Powell, who is the chairperson at the Fed, said that he wants to wait and see what's going to happen with tariffs and inflation before he makes any adjustments with interest rates. President Trump says that we have no more inflation, so we should be cutting interest rates to stimulate the economy. Well, this is where President Trump also just responded saying, quote, I would like to see him, Jerome Powell, who is the chairperson at the Federal Reserve Bank, be a little more active in terms of his idea to lower interest rates. This is a perfect time to lower interest rates. Again, Jerome Powell said that he does not want to raise interest rates, so it raised the idea that maybe President Trump might be looking to fire Jerome Powell or finding a way to get him fired because technically the president doesn't have the direct ability to fire the chairperson of the Federal Reserve Bank. This created a lot of uncertainty where you had a lot of central bankers around the world and a lot of economists essentially saying that if Jerome Powell gets fired, it would create a stock market sell-off. Well, President Trump just responded to that by saying, I have no intention of firing Jerome Powell. So President Trump wants the Federal Reserve Bank to cut interest rates as a way to stimulate the economy. But it doesn't look like he's going to be firing Jerome Powell anytime soon, which gave investors a little bit of hope and calmness that that stock market volatility might not be something that they have to worry about right now. But the reason why you generally cut interest rates is as a way to stimulate the economy. And what the Federal Reserve Bank is saying is we don't know what's going to happen with tariffs. If these tariffs really stay in effect for long enough, it could make the inflation problem worse. Why? Because businesses could be paying 10, 20, 50, 100% more to produce some of their products, depending on where these products are produced. And that could force some businesses to either A, cut their profits, but also B, raise their prices on consumers, which could make the inflation problem worse. And that's why the Federal Reserve Bank does not want to cut interest rates right now. Why does that matter to you? Because the interest rate that the Federal Reserve Bank sets will ultimately impact the mortgage rate that you pay, the credit card rate that you pay if you have credit card debt, and car loan rates on car loan debt that if you're thinking about buying a car or financing a car, that's something that could affect you. And so if the Federal Reserve Bank does not cut interest rates, those car loan rates, mortgage rates, credit card debt rates will continue to stay high. But investors are still concerned about the economy, despite the fact that President Trump is saying that maybe we'll see some relief in the trade war. Why? Because we're seeing investors look for safer investments. Traditionally, gold has been known as a safe haven. It is the investment that traders and investors turn to when they're worried about inflation or the economy or a recession. And what we've been seeing is that gold prices continue to break new record highs. Now, again, we don't know exactly why investors are buying gold, but if we just take a look at history, generally investors buy gold when they're worried about the dollar, they're worried about the economy, they're worried about a recession, they're worried about something bad, so they turn to gold. Now, as somebody who's been buying gold for a long time, what I can tell you is I don't look at gold as an investment. I look at gold as a physical store of hard money, because my theory is if I bought $10,000 worth of physical gold today, and I took $10,000 worth of physical cash today, and I buried these two things in my backyard, and then I dug them up in 10 years, my theory is that the gold would have more buying power because of inflation. And what we've been seeing is a lot of investors have been turning to safer investments like gold because, well, it looks like they might be concerned about the economy. They might be concerned about inflation. They might be concerned about the dollar. Part of that could be because of tariffs. Part of that could be because of uncertainty, because we've been seeing a lot of uncertainty. And the one thing Wall Street does not like is, of course, uncertainty. Even the Federal Reserve Bank has talked about this. The Federal Reserve Bank has talked about how there's still concerns about inflation. But the thing that I want you to understand is you cannot predict what's going to happen tomorrow. There's a lot of uncertainty out there. Even in we'll call it a normal environment, when there's no concerns about tariffs, there's always uncertainty. We don't know what's going to happen tomorrow. We don't know when the economy is going to enter a recession. We don't know what the stock market's going to do, and that should not be your goal. That's what traders do, and we know statistically that most traders lose money over the long term. Your goal is not to predict, but rather to own. Own investments for the long term. Own good investments for the long term. And when you see those good investments go on sale, meaning when you see market volatility, when you see downturns, when you see crashes, when you see recessions, use them as a buying opportunity to buy good investments. But how do you do that? Number one, you have to be able to identify what is a good investment. This might mean you want to find certain stocks that you want to invest in. You start to do that research early on. You start to figure out which companies you want to own, or maybe you just want to invest the broad American economy. You can invest in the S&P 500, which again is a group of the 500 largest companies in the stock market. Now, I got to give you the disclaimer. Investing has risks. You are never guaranteed to make money when you invest. In fact, you will lose money at some point, so make sure you always do your own due diligence and never blindly trust a random guy on YouTube. But what we know is that over the long term, the American economy has been resilient despite recessions, despite market crashes, despite depressions. And along with that, the stock market has grown as well. Does that mean that we don't see market crashes? No, we've seen 25 bear markets over the last 100 years. A bear market is when the stock market falls by 20% or more. So we've seen 25 stock market crashes over the last 100 years. We're going to continue to see more market volatility. We're going to continue to see more market crashes. But now when you keep this in mind, we know markets go up, we know markets go down. We know that the economy goes up, we know the economy goes down. But if we believe over the long term in the American economy, well, all you want to do is not try to predict, but try to own. You want to own a piece of the American economy. More specifically, you want to be able to buy at a discount. So be prepared, meaning if we know volatility is ahead, we know that there's still no guarantee on tariffs, we don't know what's going to happen tomorrow, next week, or next month, chances are we will see up days and down days. When the volatility happens, if you already know what is a good investment for you, a down day creates a good buying opportunity for you. It can create a good opportunity assuming that you have a long-term mindset. Long-term does not mean 1 month. It does not mean 6 months. It doesn't even mean a year. A year is really the minimum time frame, but we're talking multiple years, especially a decade plus. When you have that type of time horizon, now you can start to see the risk go down, especially if you're not investing in an individual company. If you're investing in the broad American economy, the longer your time horizon, the lower the risk. And a recession is actually a good thing for you. A market crash is actually a good thing for you because it allows you to come in and buy more of a good investment at a discounted price. But of course, you have to have money to invest. So now you identified a good investment. You understand that when you see volatility, it can create a buying opportunity. But now you got to have the money to invest. And this means you got to start being smart with your money. And of course, that is hard during a time where we're still dealing with inflation. Of course, it's hard during a time where the job market is tight. Of course, it's hard during a time where we saw so much inflation over the last 5 years. But the reality is the reality. I'm not here to sugarcoat things for you. I'm here to show you what the reality is. It's not going to get easier. And so if you want to build wealth, you have to learn how to live below your means wherever you are today. Whatever your salary is today, you got to spend less than what you earn, period. Now, when you do that, you take the money that you don't spend, you put some money aside for savings. That way, in case something goes wrong or bad, you don't have to go into credit card debt, and you take the other extra money and you put this money to work. You invest this money. That way, this money can work to make you money when you're not working. So you're working hard at your job, your business, whatever you're doing to make some money. And now that you're not spending all of your money, you can put some of this money to work to also make you more money. Now, of course, investments don't always go up, but if you have good long-term investments, what you want to do is buy more investments at a discounted price because your goal is to own as many assets as possible. So it would make sense to buy more of those assets when they're cheap, right? Well, when things go down, many people panic and they run away. The stock market is the one place where when things go on sale, people run away. When Amazon has a sale or Macy's has a sale, people line up around the corner with their credit card in hand ready to buy. When the stock market is on sale, people run away, they panic, they say that the economy is going to collapse, they say I never want to buy a stock again, they say the system is rigged, they say that the whole thing is against you and you should not invest your money. But that's the best time to be buying when there's blood in the streets. Now, of course, we don't know how long things will take to recover. We don't know if we're going to be entering a recession. We don't know the future, but we can look at history. And while history doesn't exactly repeat itself, it does rhyme. And you know that when those downturns happen, they can be some of the best buying opportunities. And I'm telling you this from experience. I don't say this to brag. I'm telling you this from experience because, well, obviously I was buying when 2025 volatility was happening. I talked about that. But let's talk about 2022. When the S&P 500 fell by 20%, I was making videos talking about how it's a great buying opportunity. And I was buying. In 2020, when the stock market fell by 40%, same thing. I was making videos talking about how this is a great buying opportunity. And I was buying. In 2008, or after 2008, when the housing market got demolished, I was buying. I wasn't making YouTube videos then, but I was buying. Those things, those opportunities created the ability for certain investors to come in and buy great investments at a discounted price. You don't have to be a financial genius, okay? I am not a financial genius. I'm a random guy on YouTube. But when you understand the game, that when people are running away, it creates a good buying opportunity for good investments. That's the key. It has to be a good investment because if you're buying something on the verge of bankruptcy, well, then you lose everything. And yes, there are ways to diversify by not investing in an individual company, by investing in a fund like an ETF, or by doing your research, depending on where you are in your financial journey. Some of you may want to research individual companies. Others of you might hate that idea. You just got to find what's right for you. Personal finance is personal. I can't tell you what to do. I'm not a financial advisor. I'm just a random guy on YouTube. But the whole idea is when you find volatility, that creates opportunity. But it only creates opportunity for the financially savvy that understand how the game works. That's my goal with this video, is to help you to understand Yeah, we got some good news that maybe the trade war might not be happening, but we don't know what's going to happen yet. And while everybody gets caught up in the politics and the emotions and the arguments, I want you to read between the lines, find the opportunity, and use it as a way to build wealth instead of as a way to get angry or excited or whatever the emotion is. Find the opportunity, that way you can take better care of yourself, you can take better care of your family, and you can take better care of your community. That's what I want you to understand. And again, if you want some more resources, you can check out Market Briefs, which is my free financial newsletter. And you'll also get my investing masterclass when you join as a bonus as well. And with that, I will see you on YouTube tomorrow.